Hello, my name is Latasha DeVos, and I'm with the Texas Workforce Commission Child Care Business Coaching Team. And today we're going to be discussing basic bookkeeping and how can you create a financial system for your childcare business. Today's conversation, we will first talk about accounting for funds coming in and going out. Next, how to record your transactions. And then lastly, how to get started with basic bookkeeping. At the heart of any successful business, from the one-person operation to a Fortune 500 company, is a financial accounting system. These systems are critical because, first and foremost, they let you know where your money is and where it's going and how much you're making. Having this information readily available will allow you to start doing things like paying yourself without putting your company at risk, managing cash flow so that you always have enough money to pay your bills, and knowing when it's time to grow and how to do so. It's understandable that for many childcare businesses, even these first steps of getting on the path to creating a financial system can seem daunting. Hopefully, this will guide you through the basics of developing a system, which really just consists of two big steps. That is, opening a business bank account and adopting a bookkeeping system. And most of today's topic will center around adopting the bookkeeping system. However, if you are interested on opening a business bank account and have questions about that, please see that recorded webinar. So developing a basic bookkeeping system consists of 3 steps. Step 1 is determining how you will account for funds coming in and going out. Step 2 is determining how you will record your transactions. And then step 3 is setting a schedule to record and review your transactions and sticking to it. So step 1, basic. So step 1, there's 2 basic methods of accounting. One is an accrual method, which is more complex and is based on when an expense or revenue is taken on. So for example, in the accrual method, the moment you get your credit card bill, that would be considered something that would need to be taken off of your assets versus at the time when you actually pay the bill. If using the cash method, that credit card bill would be taken off of your assets once the bill is paid. The cash method is less difficult as it is based on when things are paid or received. So now let's look at revenues. For example, when a child is in your care for a week and you say to the parent, they owe you $300. Under the accrual method, that would be considered income at that time once you began to care for that child and the monies are owed to you. Under the cash method, it wouldn't be considered income until the parent gave you the check and you deposited it. For the overwhelming majority of small childcare businesses, the cash method is going to be a lot simpler and a lot more helpful because it's going to let you know when money is coming in and out of your account. This method is more comfortable as well because it matches in many ways the act of balancing a checkbook, just in a bigger sense and in a bigger way. So step 2, now that you've determined how you will account for funds, you will need to determine how you're going to record your transactions. For many small childcare businesses, it will be easy to record transactions on a sheet of paper or on a spreadsheet such as Microsoft Excel or Google Sheets. You want to set up just some simple categories to start. You want to first start with your income and determine what are the key revenue streams for your business. So the sources that you primarily get your money from. Likely, parent fees will be one of them, and another might be childcare subsidy or payments from the food program. Perhaps there's additional funds that you receive for after-school students or grant funds. So each one of these will be a separate revenue stream to account for. Next, you're going to list out your expenses. So these may include items like payroll, cleaning, rent, repairs, supplies, and other categories that match your business. The important thing about the categories is to try to limit them. You don't need to detail every category that might occur, but just focus on the categories that you have right now. You could always add categories along the way, but if you have too many, it could become overwhelming and very difficult to account for spending or revenue as you spend time figuring out which category does this belong to. So you can use the example lists that are included on the slides as you categorize your income as well as your expense categories. And these are just examples. You will use what matches your business. Step 3, set a schedule to record and review your transactions. You should set a time to update your books at least every month. You may choose to update more frequently, but at minimum, you want to do it once a month. To update your books, start by looking at all of your revenue sources. Those would be things like cash, credit card, and app payment systems like Venmo or Zelle, and checks written to you. And you'll enter each one of them into your income on your spreadsheet. Next, you will record your expenses. You can look through your receipts, look at a bank or a credit card statement, and invoices that you've had from people that you've had to pay. Any of these proof of payments can help you to not only record these costs, but also more importantly, to make sure that you're recording the right amount for each one. Though it may seem tedious to record each transaction, it does become important in terms of understanding your profitability by tracking exactly where your money is coming from and where it's going to. Once you have recorded all of your revenue and expenses for the month, you will then add up each category. When you subtract revenue from your expenses, this will give you an idea of how much profit you made that month. You may want to consider taking some of that profit out or leaving it in the business for a rainy day or to help with paying your bills that may be coming up. And so here's a useful way and very simple way to record and track your monthly revenue. You want to title it revenue, or what revenue did I receive? And then you'll insert the date, a description of what you were paid for. So in this example, it's a subsidy payment, the amount that was received, and then how you're categorizing it. So that's that broad category of subsidy. You'll do that for every revenue stream or source that you've received for the month. And then at the end, you will total up all the revenues received. And then, of course, tuck those proofs of payment away. Similar to the revenue, there's a way that you can record your monthly expenses. Again, very simple. You just want to go line by line, recording the date, what you paid for, the amount that was paid, and then what category does it fall under. So in this example, you paid your electric bill for $300. That's a utility. And also salaries for staff in the amount of $5,000, and that will fall under personnel. So every expense that you have for the month, again, you'll just record it and then you'll total those up as well. And once you have the totals for both your revenue and expenses, you will subtract the revenue from your expenses to understand your profit for the month. So some pro tips to make this go even more seamless for you. When categorizing and filing your receipts, be sure to label them at that time so you remember what category that you've placed them under. When thinking about your accounting, you want to first and foremost stick to a regular schedule. Make sure that you're going to update your records, whether it's monthly, every other week, or every week. This will save you time and headache for the future. Leaving all of your expenses and revenue to pile up is not going to help you. You won't be able to understand how your business is doing on a moment's notice, nor will you likely keep up with the system as it becomes more and more intimidating to record so many receipts and statements that have piled up since you last updated your system. So sticking to that regular schedule is very important. And lastly, you want to consider an electronic system over time. It can be very tedious to do accounting by hand. So you may want to create a simple spreadsheet or even get an online system. When looking for online systems like QuickBooks, FreshBooks, or Xero, think about the ease of use, the cost, and the complexity. The reality is that for many of you with a small childcare business, you may not need QuickBooks or any more complicated systems. It may be something where you want to choose a simpler one that is going to be less expensive and easier to use. Even still, make sure that you keep all of your records, whether it's taking photos or scanning each receipt and statement so that you have it electronically, or even just the good old shoebox method, putting everyone and everything in one place. Make sure you hold on to your documentation of the transactions that you've recorded in your bookkeeping system. This is very important in case you are audited by the IRS. It's also important because it will allow you to go back and check on your information if needed. So getting help. Help is available if you still have questions about developing a financial system for your childcare business. You can book a consultation with a business coach to discuss. You can also visit childcare.texas.gov for links to help and other resources in English and in Spanish. To request support from a coach, either whether you have a quick question through email or if you do want to request that one-on-one coaching, you will email texas@ecebizcoach.org, and that support is also available in English and in Spanish. And lastly, there's Q&A webinars happening 5 times a week on topics such as this and other relevant topics on business practices for childcare business owners. These are also in English and in Spanish, and you can view a schedule for the upcoming webinars at childcare.texas.gov. Thank you.